Phew! AMC stock closing almost 9% on the red today. Wow. Surprisingly enough, I don't think lots of apes were faced by this move. You know what? Because the whole market was selling off today. The whole market. At a point, the Dow Jones was even down 800%. The Nasdaq lost at a point more than 3%. I mean, just look at the VIX, which is the fear index. Whenever this is high, you can tell there is fear in the market. And people have reasons to have fear in the market. And believe it or not, AMC is part of the market. So whenever investors are freaking out and pull money out of the market, that's resulting into red days like this. AMC, being a highly volatile stock, will always be caught up in the middle of all this. But in this video, I want to address something. People are trying to link the Evergrande situation with AMC and how it can potentially trigger something. Well, I think, first of all, let's understand what is actually happening with Evergrande. So China Evergrande is a real estate company. It's one of the top 3 real estate developers in China, owning almost 1.5 million apartments. 1.5 million apartments. This is how big they are. So the thing is, they are in so much debt, talking about $300 billion of debt. They are so caught up in the debt that they are in a position where they don't have money anymore to even pay back interest on that huge tab to the creditors. And that's why people are freaking out, because they try to, simulate this back to what happened in 2008 with the mortgage crisis and, Lehman Brothers. Why? Because not only those creditors that are not able to see the money for which they invested into the bonds on this company are not only in China, but they are, in the US. They are pretty much all across the globe, because China is the second largest economy in the world. So if that company, which is holding almost 28% of the part of the Chinese economy, it's not able to do business anymore and falls down, well, what will happen to all of these other investors that invested, that lended money to that company? And that's why people are freaking out. So as I said, whenever the market is selling off, especially on the last recent days, people were, kind of announcing this, well, I'm not surprised, and neither should you. Now, the question is, how will that event impact shorts? The AMC and the short squeeze moving forward. Let's look at this picture, right? So on the right-hand side of things, we have Blackrock owning 30.4 million shares on AMC behind Vanguard. So this is institutional ownership on AMC, the top 5. And on the left-hand side of the picture, you have Evergrande bond paper, all right, maturing 2023. And look at who is the number 1 holder, Blackrock, on 44,000 pieces of this paper, the paper. So if this company, because it's not the case yet, but things are looking like things are going as if this company is going to default. So this money, all of this money that BlackRock and all of these other guys invested into this Evergrande, it's now technically lost worth 0, which in reality is not going to be the case, because you have, bond repayment processes whenever you invest in the bond market like this. But let's just imagine, for the sake of this example, that this money is worth 0. How will this impact BlackRock and the shares they have in AMC? Well, first of all, this total, it's based on data we had back in June 30th, so the last quarter. This quarter, it may be lower, it may be higher. So as of now, we cannot really tell if this number is still what is in reality. We'll only know whenever they file the next 13 filings for the next quarter coming. But BlackRock is also managing $2.7 trillion. So I don't think this money will be enough to cause BlackRock to panic and sell some of the shares or all the shares they have into AMC. Even though a scenario where we have such a big shareholder getting out of AMC, even though it might cause a big sell-off, I think is going to do us a huge favor when it comes to shares lending. Because all of these shares, well, technically it will, but in reality we don't know. But let's just put it aside for now. So to cut up short, I don't think, even though this money will be totally gone in the bond market in Evergrande, it's going to impact BlackRock and shares they have in AMC, because maybe they're making much more money into the lending process or just so far by the price increase since they bought AMC. So again, I don't see how this can impact directly the shares of BlackRock. Now, let's also imagine a scenario where in case this company defaults, well, if it pulls back, if AMC pulls back, it shouldn't cause any panic. Why? Because we all know that even without the institution in the play, hedges still have to cover. And that's why it doesn't change the number one catalyst of this thing, which is hedges have to cover. So for that reason, nothing changes. If you can buy, please do so. If you cannot, just hold. But if you have something else to do, well, that's your money, that's your loss, that's your profit.